Hello, hello. Welcome, ladies and gentlemen. This is Fast Track Cryptos and Reviews, and I've got a lot of content for you today. Everyone, if you find value in this video, please like and subscribe. Hit that notification bell so you'll be updated. Whenever I drop a video, you'll be the first to know. I've got a few updates in the cryptocurrency market, but before I talk about that, I'd like to show you this exchange, Uphold. Now, I'm not a financial advisor. I do not give financial advice, but this is a very reliable and dependable exchange. I've done a lot of business with Uphold. It's been completely consistent. It hasn't ran into any of the issues of other exchanges. They've got over 10 million users, over 60 different countries. It's a very reliable exchange. So I'm not recommending, I'm not giving financial advice, but I'm just saying Uphold is quite reliable exchange, and it'll serve you well. They've got a lot of different cryptocurrencies. They've got all of the major ones, and they've got a lot of smaller ones as well. So Uphold, I will link it in the description as well as these articles. Okay. Today I want to move on and show you what's going on from the space of China versus the USA. Now, China says crypto is here to stay. It must be regulated. And the Hong Kong Treasury chief is a man who's saying it. Let's get into it because this is actually very interesting. In my last video, I talked about how China is opening up their crypto market to retail traders and exchanges on June 1st. Now, this article is explaining. Let's start at the top. Hong Kong has decided to let retail investors trade cryptocurrency under its new regulatory regime because virtual assets are going to stay. The city's minister overseeing financial services said on Tuesday. Cryptocurrency have been banned in mainland China since 2021, but the former British colony, Hong Kong, which has a separate financial system and regulators, has announced plans to become a major digital asset hub. Hong Kong is actually really interesting in how it ties in to China. You got mainland China, which is kind of their own domestic market, and they keep pretty much all the outsiders out. All the major industry, for the most part, is controlled within. Sometimes you can do a little bit of business there, but it's going to be highly controlled, and there are going to be a lot of different rules as to how you need to operate. And if you don't follow those rules, you got to go. But Hong Kong is pretty much the marketplace to the world. It's open. And so they do a lot of their financial and investment access through Hong Kong. So it makes no surprise to me that Hong Kong is going to open this up and mainland is going to remain closed. So it's still in the jurisdiction of mainland since 2021. It's still technically banned. Technically. Okay, from June 1st, authorities will begin accepting applications for licenses from cryptocurrency exchanges that will allow them to sell major tokens, including Bitcoin and Ether, to individual traders. So the markets won't open on June 1st, but they'll begin accepting applications for licenses. Despite the potential risk involved, meaning virtual assets, also carries with it fundamental value. Christopher Hui, Hong Kong's Secretary for Financial Services and the Treasury, told AFP in an interview. So for these positive elements to be harnessed, these activities have to be allowed in a regulated way. So they're allowed in, and they've got regulation, which is positive, a lot better than what's going on in other jurisdictions. Regulators around the world are examining cryptocurrencies with renewed urgency following the collapse of trading platform FTX last year. and other high-profile failures in the sector. Hong Kong was initially hesitant to allow crypto exchanges to take on retail clients, but Hui acknowledged that there was a considerable interest in trading. So they were going to open it up to just industry, financial industry, the big players. But a lot of people all around Asia, I think 2/3 of the crypto activity is coming out of Asia. So they had considerable interest. As to whether Beijing backed Hong Kong's plans to open up crypto trading, Hui said the finance hub charts its path by following the emerging global consensus. Different jurisdictions will adopt the right approach to their own market, and Hong Kong is no exception, he said. So basically, without saying it, he says Hong Kong is charting this path based upon the global consensus. All the people want it, and he pretty much won't speak on different jurisdictions, which is extremely smart, extremely smart and political way to speak. One thing I got to say about the Chinese, I've got pretty reasonable experience. I've done business in China. I've done business in Hong Kong. Obviously, I've done business in the U.S. market. I am non-political. We are not even patriotic. We're pretty independent in our views and our perspectives on this cryptocurrency market for the most part. And so I got to give credit when credit's due. I've seen how they operate. I think how they operate with the two system, mainland China versus Hong Kong, I think is brilliant. It's very intelligent. It gives them a lot of options in how they want to engage the world. They're very stable, consequently, and they still got top-down authority, so you don't got to go through all these democratic channels like you have to in the U.S. So things get done quick. He says we are an open market, so while different jurisdictions have different laws and requirements, I think that what we should do is based on what we are good at, which is pretty much business and finance. The government's pivot towards crypto and fintech coincides with Hong Kong's recent reopening following 3 years of tough COVID policies that isolated it internationally and drove talent away. Yeah, COVID was really tough on Hong Kong and mainland China, as we all know. Hong Kong's international business reputation also took a hit as Beijing cracked down on political freedoms as mass democracy protests in 2019. We're all familiar with that as well. I won't say too much about that, but we remember all that was going on. The promise of fresh crypto exchange regulations has attracted more than 80 inquiries with the city's investment promotion agency. The Treasury chief told AFP. So that's a lot of inquiries when you think about these are exchanges, right? These are inquiries about exchanges. They want to have over 80 exchanges. I don't think they're going to have that many. They're going to whittle it down based on their requirements and probably choose the most competent parties to have an exchange. There's only so many exchanges that you can have in a market, so we'll see how they whittle it down, but that's a lot of inquiries. One thing that has been very obvious is that Hong Kong is back to usual, he said. We are back to business. He's got the right guardrails. During a public consultation that ended in March, some crypto firms bemoaned stringent proposals that make compliance very costly. One concession made by the regulators was to lower the insurance coverage requirement down to 50% for virtual assets that are held by clients in cold storage, a more secure way of storing crypto offline. So we don't all know about. So cold storage, you got your hot wallets, you got your cold storage. Once it's cold, it's pretty tough, almost impossible for anyone to hack in and gain access to your crypto because it's literally offline. You've got to bring it back online to access it. And so they're not requiring insurance for those virtual assets, or at least, let's see, lower the insurance requirement to 50% for those assets that are held offline. So it makes the price reasonable. For technical reasons, of course, cold storage presents lesser risk for hacking, Hui said, saying the shift was to reflect risk in a proportional way. Now, for a lot of what people say about China and Hong Kong being, completely, I don't know. They use a lot of words like oppressive, and they use these words like regime, and they make it seem almost inhumane. But it looks like they're listening. They listen to business people. They listen to the markets, and ultimately they listen to what the people want. If they're leading this, which it looks like they're going to start to turn the dial June 1st, they've got to be listening to what the people want. Okay, here we go. Let's keep it moving. Under the new rules, crypto exchanges must assess a client's risk tolerance and knowledge of cryptocurrencies and impose risk exposure limits. Now, I think they're going to have some sort of test, and you're going to have to express some sort of knowledge. And the tolerance means you probably got a bit of disposable income or disposable net worth that allows you to manage risk. So we'll have to see exactly what that is. It doesn't detail exactly what the requirements are. Investors have to be in the know in terms of what they're going into. Hui said, adding that education is a priority. But authorities have yet to specify the exact threshold for crypto knowledge needing for a retail investor to trade. One of several implementation details left up in the air. So we don't really know. We don't know the threshold. So we're going to have to see, I guess, maybe June 1st, we'll find out. Hong Kong securities regulators will issue guidelines later, Hui said. Crypto-related scams are a burgeoning problem in Hong Kong, with the city last year recording more than 2,300 such cases, with a total losses of 1.7 billion Hong Kong dollars, which is about 217 million. That's a lot of money. So, yeah, the regulation of this is going to be very important. We understand the risks. We, at the same time, put in the right guardrails, Hui told AFP. So we'll see. Those are some smart people over there in Hong Kong. They do business. They got a massive market, especially in conjunction with mainland China. Massive market, and they do a good job of controlling. Okay, on the flip side, right? So if China is leading, at least they're getting regulation in place for retail traders quicker than anyone, right? So I've heard this analogy a lot of they're going to flip the switch when we can get into crypto, and then everything's going to switch. I don't know. I think it's more of a 360 degree dial, and I think they're turning the dial. I think, June 1st, the dial's going to be turned 15 to 30 degrees on a 360 degree continuum. I think 15 to 30 degree dial rotation. I think it's a better analogy, because they're going to open it up, but they're not going to be literally open for trading yet. They're just going to allow people to come into the fold to actually, get a license for an exchange. We'll see how long it takes for them to get the license, and what are the standards and requirements once they have the license to operate, and then who's able to actually trade retail. Is it just going to be the really wealthy people, the sophisticated investors, or certain class categories? If that's the case, then it's going to open a lot slower than just allowing retail people to trade. But it's definitely, in my view, just in my perspective, this is not financial advice, but I think it is going to have an impact on the trading and the volume, and ultimately the price increase. At least the volatility is going to increase based upon this. But I think it's going to happen with a transition based on how they're doing it. Like I said, these are smart people. Okay, so now the U.S. in contrast. Now this article is a little bit older. This last article with Hong Kong was like May 27th. And this one here is way back from December 2022. Ripple and the U.S. Securities and Exchange Commission accused one another of stretching the laws. They argued for a ruling on whether XRP, the world's seventh largest cryptocurrency, is a security. Both sides urged the U.S. District Judge Annalisa Torres to rule in their favor without sending the case to trial on papers filed on Friday. The final round of briefs seeking summary judgment brings the case closer to a ruling that could further define what digital assets are considered securities in the U.S. The judge could grant either side a win without a trial or decide to narrow the issues that go before the jury. Ripple's founder created XRP in 2012. The SEC sued the San Francisco-based company and its current and former chief executives in December 2020, alleging that they have been conducting a 1.3 billion unregistered securities offering since the token's creation. Ripple argued in its briefs that SEC was seeking a ruling that XRP was an investment contract, but without any contract, without any investor rights, without any issuer obligations. The SEC is asking the court to rewrite the statutes that define its authority, Ripple said. SEC said Ripple is relying on a made-up test that ignores U.S. security laws. The U.S. Supreme Court defined an investment contract as an investment of money in common enterprise, with profits to come solely from the efforts of others. In 1946, SEC versus Howie. The profit piece is about expectations, not about commitments, the SEC said in its brief on Friday. So if people expect to get a higher return, then SEC says that's a security. That's like really broad and really weak. I don't know. I don't think that's a very firm argument. We'll see what the judge says. Ripple and its executives' statements were the type that would lead reasonable investors to expect profits from the company's efforts to develop uses for XRP. The agency argued Torres has accepted briefs from companies that say they rely on XRP technology and cryptocurrency industry groups, as well as a group of XRP holders who said the SEC has not shown purchasers were influenced by or aware of Ripple's statements. So they're fighting over that, basically. So one jurisdiction is moving forward and, licensing exchanges and putting in regulations in place and putting in insurance terms and, even negotiating those terms. They're getting inquiries. And so it's moving forward. Cryptocurrency is not going away. If you are not involved in it, if you are not a part of it, it's just my opinion that the industry of cryptocurrency and the value and how transactions are done globally online are going to be the future of trade. So it's in everyone's best interest to at least gain knowledge on it, because this ain't stopping. It's going forward. Even if the SEC delay, all they can do is really delay what's going on in the U.S. Ripple can just leave the U.S. All these countries, Coinbase, all these exchanges can just leave the U.S. And U.S. people can leave the U.S. And U.S. people can still trade outside of their home jurisdiction. They can't really stop anything. And it seems like they're just being bullies. They're saying we control the dollar. We control much of the trade going on globally for the last 100 years of our primacy that we had. And so this next phase of trade and transaction, we're going to control that too. That's pretty much what they're saying, but they have no leg to stand on because this is a global, and different jurisdictions have their own autonomy and independence and sovereignty to be able to disperse it and trade it how they want. The U.S. just don't have the contracts like they had with the dollar. They just don't. And cryptocurrency came too fast for them to be able to weave in all of the different strongholds that they need to control it. I think it's a waste of time, to be frank with you, but that's just my opinion. Okay. Very, very interesting. And the last thing I'll show you is they're flocking to Hong Kong. Crypto exchanges are flocking to Hong Kong. This is on Blockworks. You guys can go and check that out, and you can read up on it. I won't go into it too deep because the video is already 19 minutes, going on 20 minutes, and I don't want to have a video that goes too long. But look, Hong Kong is leading, and I did another video on Russia as well because they're joining China, and they're making it accessible to their Russian people as well. And at the very least, they're going to be trading it, in the East. And like I said, most of the activity going on in cryptocurrency as far as trading for value goes on in Asia. So I think it's pretty clear. Get your knowledge up. Like and subscribe as I bring you more reviews on this subject, more content. Don't just look at my page, look at all of the channels on crypto and educate yourself, and then make the best decision for yourself. I'm not telling you to buy, hold, or sell any specific cryptocurrencies or anything like that, but educate yourself in this industry and look at where it's going, get as much information as possible. And then, once you're doing your due diligence, make the best decision for yourself. Okay, this is Fast Track Cryptos and Technology Reviews. Thank you so much for tuning in today. Once again, like and subscribe, and we'll see you next time as the latest developments come your way. Peace.